The expectation that Bitcoin's charge will boom rapidly as soon as institutional money begins flowing into the cryptocurrency, has resulted in a whole lot of Bitcoin holders eagerly waiting for Wall Street's formal entry within the crypto markets. But does Bitcoin really need Wall Avenue? Fraud in the FX markets worldwide. Banks have paid over $10 billion in penalties to settle allegations that they defrauded their clients while undertaking foreign money trades on their behalf. The banks generally shortchange their customers via the front walking, a process of executing trades for the financial institution's proprietary buying and selling table earlier than executing trades on their patron's behalf. They used their knowledge of the client's impending trade to make profits for his or her bank. The listing of banks who have settled encompass Financial Institution of America, Citi, HSBC and Barclays. The penalties paid through the banks might not be the cease of the story. A former HSBC FX dealer, Mark Johnson, has been convicted on 9 prices of fraud for the front-strolling a $3.5 billion order of Cairn Energy to convert bucks to kilos. Commodities, affecting Principal Street. Big banks have come to play a big role both inside the physical commodities area in addition to the market in commodity derivatives. After Goldman Sachs entered the aluminum commercial enterprise in a big manner, it led to an growth in prices. There were allegations that this changed into now not just because of easy deliver call for imbalance, but due to an detail of marketplace manipulation as properly. It led to standard customers of aluminum, like Coca-Cola, complaining to the LME about how those actions were impacting it. Goldman has been fined for inflicting a spike in oil charges as well. Extra recently, Barclays has been sued for $850 million by means of a hedge fund for misusing the knowledge of its trades and ramping up the rate of copper. Libor scandal. If marketplace manipulations inside the FX and commodities have been finished by means of person bankers, manipulation within the Libor market turned into by means of banks collaborating together. Libor, or the London Interbank Offered Charge, is the benchmark rate used to set hobby rates in a variety of contracts the world over. It is calculated through polling various banks at the interest rates that they count on to pay on a particular day. There are some of derivatives which might be based on Libor, and banks have manipulated Libor, with the aid of inflating or deflating the hobby charge they count on to acquire, to earnings on their buying and selling positions. The Libor scandal led to banks paying record fines. Deutsche Bank paid a first class of $2.50 billion. It additionally resulted in positive high-profile scalps, such as the resignation of Marcus Agius and Bob Diamond, the chairman and CEO of Barclays. Better volatility and more scrutiny at the same time as some early buyers would possibly enjoy the fast increase in price. It is controversial whether Wall Road's entry can have an unusual nice effect. It may result in better volatility and extra scrutiny from regulators. The examples referred to above do not even communicate approximately mortgage markets, wherein immoderate chance-taking through banks ended in a worldwide financial disaster in 2008. Given the records of Wall Street's corporations in pursuing better profits, despite the fact that it method ignoring their fiduciary duties, Bitcoin will be better off if Wall Avenue stored away.